Good evening, everyone, and welcome. The Federal Reserve opted not to show its hand. In its latest policy statement, the central bank made just subtle changes, offering little in the way of new clues about when or whether it will hike interest rates for the first time in almost a decade. And the markets seem to like that cluelessness. The Dow Jones Industrial Average rose 121 points to 17,751. NASDAQ gained 22, and the S&P 500 climbed 15. Steve Liesman has more on what the Fed did and did not say.
The Federal Reserve left interest rates unchanged at its July meeting as expected. But the question is whether it hinted at a rate hike to come at the next meeting. On the one hand, it upgraded one part of the equation needed to raise rates, jobs, but it left the second one, inflation, unchanged.
The Fed doesn't want to show its hand as it did in the 2013 taper tantrum. We don't want to see any volatility in the financial markets.
The Fed said there were solid job gains, suggesting it had moved a step closer to its criteria of gains in the labor market needed to hike. It also suggested a lower bar for hiking, saying it will hike when it sees, quote, some further improvement, not just improvement.
I think the Fed's acknowledging the economy's improving. I like their language around the labor market. The economy is standing up on its own 2 feet more than it has in some time. This will eventually cause the Fed to raise rates.
But the Fed characterized inflation in virtually the same terms it did in June, as running below the 2% target and likely to gradually rise in the medium term to that target. So no progress there. That means the September hike still depends on strong job gains in the next two reports before that September 17th meeting. And it depends on inflation numbers that don't slide backwards, even amid lower commodity prices and slumping international growth.
Of course, inflation is going to play a very big role. We continue to see that when we look at core inflation numbers, that those numbers are gradually increasing. In fact, if we look at the 3-month average annualized rate, that's also picking up, which shows an upward trend.
So was there a hint that the Fed will raise rates in September? Yes, if you count as a hint the idea that they're going to look at the jobs data and the inflation data and make up their mind then. That's not really much of a hint at all. For Nightly Business Report, I'm Steve Liesman in Washington.